By 1995, the world thought it was Japan's. In just 35 years, the economy had incredibly soared from $45 billion to $5.5 trillion, growing 100 times. Japan was the world's second largest economy, and everyone was saying, the 21st century will be Japan's century. But in 2023, Japan's economy is $4.2 trillion. Smaller than 1995, 30 years lost, zero growth. And now it is struggling with the highest debt ratio in history. This is not just an economic story. This is the story of how one reaches the peak, how one falls, and how one cannot rise again. And it is a giant warning for the rest of the world. Before we start, I have a request. If economic collapses, miracles, and real stories interest you, subscribe. Like it, leave a comment. Because this type of content only grows with your support. If you are ready, let's start. When World War II ended, Japan was a devastated country. Cities were destroyed. Industry was finished. People were hungry. But then something happened. A miracle. Between 1950 and 1973, the per capita income in Japan grew by an average of 8% every year. 8% every year. Visualize this in your mind. Not even China grew this much between 1990 and 2020. Japan was experiencing the fastest economic development in history. How did it happen? First reason, state coordination. Japan had the Ministry of International Trade and Industry. This ministry was guiding the economy. Which sector will be invested in? Which companies will be supported? Where will loans go? The state determined all of it. The central bank and the Japan Development Bank were pumping money into the market so that the private sector would invest. In the initial phase, they focused on heavy industry, iron, steel, coal, textiles, but the private sector was doing the main work. The state was just the coordinator. Second reason, the Keiretsu system. Companies in different sectors in Japan were interconnected. Toyota was producing cars, the sub-industry was producing parts, and they all held shares in each other. The bank in the center was financing all of them. These companies were not competing hostilely. They were working in solidarity. The state was also supporting them. It was protecting them with customs duties, so that American cars would not enter, so that Toyota could grow and get stronger. They call this model import substitution, export-led growth. But there is a misconception here. Japan was actually not exporting much at that time. 1970, the ratio of total exports to the economy was only 11%. This means Japan was actually growing with the domestic market. People were getting richer and consuming. Domestic demand was increasing. Third reason, America. And this is perhaps the least discussed but the most important reason. There was the Cold War. America wanted strong allies in the Pacific against the Soviet threat. But Japan was remaining neutral. It was even normalizing its relations with the Soviets, with communist China. America became worried. The solution? To feed Japan, to enrich it, to move it away from communism. In the 1950s, a security agreement was signed between America and Japan. America took over Japan's defense. Japan would no longer spend on defense. It would invest all its money in the economy. Research shows, if Japan had managed its own defense, its economy in 1976 would have been 30% smaller. 30%. Furthermore, America provided economic aid. The World Bank and American banks provided cheap loans. Technology transfer was made. And most importantly, America opened its own market to Japanese companies. Japanese firms could sell goods in the American market without paying customs duty. More than 30% of Japanese exports in the 1960s were going to America. Even Bulgaria's exports to the Soviets were less than this. So Japan did not grow only with its own success. It grew under the umbrella of America. Fourth reason, excessive risk-taking. Banks in Japan were printing loans crazily. They were giving money they didn't even have to companies. Companies were growing by taking excessive debt. The risk was unbelievable, but it was working. Because the money was going to investment, not consumption. As the economy grew, people were getting richer. As they got richer, they were saving. Japanese culture was a culture of saving. Savings were going to the banks. The banks were printing the credit again. A perfect cycle. But cycles do not last forever. 73, the oil crisis. Oil prices soared. Production costs increased. Countries dependent on oil, like Japan, were hit. The incredible growth of the Japanese miracle stopped in 1973. Growth slowed down, but it hadn't ended yet. The real problem started in the 1980s. America was now uncomfortable with Japan. Toyota, Honda, Sony had captured the American market. Automotive giants in Detroit were going bankrupt. America was angry. In 1985, the Plaza Accord was signed. America imposed a new requirement on Japan. Strengthen the yen. Let the dollar weaken, let the yen strengthen. This way, Japanese goods would become more expensive in America, and American goods would become cheaper. Japan accepted. The yen appreciated. And the disaster began here. When the yen strengthened, exporting became difficult. The economy slowed down. The government panicked. What did it do? It lowered interest rates. Started printing money. Cheap money flowed into the market. But this time it went to speculation, not investment. The real estate bubble inflated. Land prices in Tokyo rose crazily. At one point, the land around the Imperial Palace was more valuable than all the real estate in California. Are you confused? Yes, it was that ridiculous. The stock market bubble inflated. The Nikkei index reached 38,915 points in 1989. Its historical peak. Everyone thought they were rich. Companies were borrowing and buying real estate. Banks were lending credit crazily. No one stopped it, because everyone thought prices rise forever. But prices do not rise forever. 1990, the Japanese government finally hit the brakes. It raised interest rates. It cut off the flow of credit. The bubble burst. Real estate prices collapsed. The stock market collapsed. The Nikkei fell 50%. Then it fell even further. Banks started to fail, because the real estate collateral for the loans they gave was now worthless. Companies were plunged into debt. A wave of bankruptcies started. Unemployment increased, and Japan entered the lost decade. Then it became the lost 20 years. Then the lost 30 years. Why could it not recover? First reason, zombie companies. Companies that should have failed did not fail. Banks kept them alive, because if they declared bankruptcy, the banks themselves would fail. Zombie companies remained in the economy, but they did not grow. They just survived. They poisoned the economy. Second reason, deflation. Prices fell. People did not spend thinking, tomorrow it will be cheaper. If you do not spend, the economy does not grow. If the economy does not grow, prices fall even further. A vicious cycle. Third reason, demographic collapse. Japan's population is aging. The birth rate is very low. Only 730,000 babies were born in 2024. But more than 1.6 million people died. 2 people die for every baby born. The young population is decreasing. The workforce is shrinking. Domestic demand is falling. Taxes are increasing because the retirement and health expenses of the elderly need to be covered. Japan's population is projected to fall below 105 million in 2050. It may decrease to 87 million in 2060. Fourth reason, mountain of debt. Japan's public debt is 260% of its economy, the highest rate in the world. 24% of the budget every year is used just to pay the interest on the debt. If interest rates rise, Japan could go bankrupt. That is why the central bank is keeping interest rates at zero. It even moved to negative interest rates. It is printing money. It is buying bonds. The central bank's assets are 130% of the economy. This is not sustainable. But Japan has no other choice. Japan is not just experiencing its own crisis. It is also affecting the global economy. How? Carry trade. Interest rates in Japan are zero. Investors borrow yen cheaply. Then they convert it to dollars or euros and invest in high-interest countries. 3% in America, 4% in Australia, more in Brazil. The difference is pure profit. Trillions of yen spread throughout the world. Japan pumped cheap money into the global economy. But something happened in 2024. Japan raised interest rates for the first time, only to 0.5%. But it was enough. Investors panicked. They rushed to close their yen loans. The yen strengthened. Global stock markets crashed. The Nikkei experienced its sharpest fall since 1987. The yen carry trade collapsed, and the world economy was shaken, because Japan is too big to fail. Japan's story consists of 3 lessons. First lesson, the debt bubble always bursts. In the 1980s, Japan thought the growth was eternal, but it was not. Second lesson, demographic collapse kills the economy. Without young people, the economy does not grow. Third lesson, keeping zombie companies alive poisons the economy. If you do not let what should fail, fail, there will be no new growth. Japan has been in the same place for 30 years. It cannot recover. Young people are fleeing. Debt is increasing. And there is no way out. This is not just Japan's problem. Low birth rate, high debt, aging population, these are also present in Europe. They are also present in China. They are even starting in America. Japan is a warning. It was the first, but it will not be the last. If this story has given you a new perspective, like it, subscribe, write a comment, because understanding history means seeing the future, and Japan's story is not over yet. See you in the next video. Take care of yourselves.